What's going on again, ladies and gentlemen, boys and girls across the world? Hope you guys can hear me. I got my Yeti mic tonight. 1 second. Yeah, I think I see. Hello, testing 1, 2, 3. Make sure my mic is not too low. 1, 2. Testing 1, 2, 3. Testing. Oh, see, Derek Washington, so you can hear me. What's going on there, Derek Washington? All right, let me share this out real quick. Coming in. Hey, how's it going there? TGX Gamer. I'm going to be talking about earnings reports. As you guys know, this is earnings season. As you guys are coming in, guys and girls are coming in, you can hit the thumbs up button to, if you like the video or whatnot, and share it out. I'm sharing right now on my Facebook and all of the good stuff. So give me 1 second as I talk about the earning reports. Hold on. I'm reading you guys coming in the chat room who are here live. I brought stop. I brought stop because of you. Awesome. On TD ETrade. Awesome. You go live while I'm hitting. So you go live while I'm hitting the gym. Don't worry about it. After the gym, you can hit the playback button, catch the podcast, catch the playback, and get it back that way too. So let me share this out. When we talk about these quarterly reports, right? And I don't have a set time when I go live. I just go live. And when I go live, it is what it is. If you can catch me at that time, great to have you on. If not, you can catch the playback. So, all right. Oh, I'm putting it on Twitter too. So if you're not following me, the Investor Show on Twitter, the Investor Show on Facebook, the Investor Show on Instagram as well. All right. I think that's enough. I put it on my Twitter, But anyway, so quarterly reports, why they're so important. I'm making this video because someone reached out to me and said, hey, Prince, what is the, why are you sharing earnings calendar? I was sharing the earnings calendar here on my Facebook, Instagram, and stuff like that. Why are you sharing the earnings calendar? And I said, well, I'm sharing the earnings calendar because, these are the earning reports when they come out. And they said, well, why are these important? Why the date that the earning reports are coming out is so important? I said, you know what? That's a great question. I'm going to make a video about that. The reason why earning reports are so important, just like today, you just had Amazon release its earnings. During the day, the stock went up 7%. And as of right now in the aftermarket, the stock is down 7%. The reason why earning reports are so important, because they give you a view of the company pretty much every quarter. The company has to come in and say, how did you perform this quarter to all its investors? This is how I performed this quarter. And also that I performed this quarter, this is what I plan on doing next quarter. So usually, not in all cases, but a lot of times in companies, hello, how you doing, Miss Butterscotch? If I got that right, it's kind of hard to read. I got a little lights on and going and stuff like that. But usually it caused a big swing in a stock. And if you guys saw me option trade here, I usually traded around option trading earnings time. I love earning reports. So earning reports was like when I have a big swing. Amazon is going to shoot up or shoot down. Netflix is going to shoot up or shoot down. Facebook is going to shoot up, make these big, massive moves around earnings report time. And the reason why you have that is because now a company has to, you said, where did you get the posters in your background? Oh, that's a long time ago. I got them made when I was in Hawaii. It looks kind of, I need to get the whole wall done. I need to get a big banner that covers the whole thing. But, I'm working there. But I got these done a long time ago at a print shop when I lived in Hawaii. And it got the Investor Show. And I when cup to match. Look at that. Woo, I'm getting up there, right? I know, I'm showing out a little bit. But anyway, when you make an investment, oh, Derek Washington said he lives in Hawaii. Wow, I used to live in Hawaii for 3 years. Left there, I've been in Denver, Colorado now. How do you like Hawaii? So that's why we have the question of, that's why we have the question. Oh, he said he lives in Pearl City. Oh, nice. Definitely remember Pearl City down there. Pearl City and Mililani and what else is between there? It's a city between Pearl City and Pearl Harbor. I can't think of why it's not coming to me. I know Mililani is above it. but he says he loves it. But yeah, Hawaii is nice. I didn't like living there, and also, also I do like I'm going to be doing a show tomorrow. ThinkTechHawaii.com is a show that I do out of Hawaii. So you might catch me on local television out there in Hawaii. I did local television. IAEA, that's what it is. IAEA. So I did local television out in Hawaii. Think Tech Hawaii. Now I Skype in and do it every other week. You can catch it on thinktech.com. They live stream it, and sometimes they may play it back on local television over there. So that's pretty cool. That's why I got a big start out of there. I did the radio a couple times at iHeart in Hawaii, and I did my book launch in Hawaii too. My second book launch in Hawaii with Wally Famous Amos, right? But anyway, that's besides the point. I don't want to deviate from Hawaii and all the good stuff like that. But the reason why you have these earning reports, because when you make an investment, let's say if I say, hey guys, my name is Prince Dykes, and I would, I'm looking to raise money so I can build a barbershop. And you guys decide to invest into me, which, we're speaking, this is definitely not how it's supposed to happen. That's definitely not legal, but we're just speaking in follow my, catch my drift. So you guys say, hey, you know what? I'll make an investment into you. I believe in you as a barber. You make an investment into me as a barber. Maybe you give me $1,000, $200. In return, I give you shares in the company. Now you guys are part owner in my company. That's exactly what you're doing when you're buying stock, right? So now you're coming back, right? Now that you're coming back, and I open up my barbershop, I have customers coming in and out. Guess what? As an investor, you're going to want quarterly reports, annual reports. Hey, how is business going? Is business going well? Is business going bad? If the barbershop is doing well, then guess what? More people may want to invest into it. More people invest into it, it may raise the stock price of that company. If you say, hey, company's not going too well, I got some legal things, political things going on, guess what? People start to get rid of the company. They start to lose faith in you, and the stock may drop. That's exactly what happens. So also, when you're doing that, you also have to predict what's happening next quarter. Hey, this past quarter, we didn't do so well. We had to let employees go. We didn't make as much money as we thought we were going to make. Now, for next quarter, this is what we plan on doing. I plan on making $1 million next quarter by doing X, Y, Z. When you say that, that's the expectations of what people expect the company to do. Now, the next time you come around and you don't meet those expectations, this is when you see the volatility in the company comes. When they start to talk about their money, that's exactly what quarterly reports are. That's why quarterly reports are so important. That's why when you see me share those earnings calendar, hey, earnings calendar, this is coming up. And who Levette Atlas said spread options is best around earnings. Of course, this is when we expect the stock to make a huge move to the upside, downside. Some cases it stay the same. So to take advantage of this is when option traders come in. They may put a spread option on. They may buy a call. They may buy a put. They may do anything, whatever the case may be, because they're expecting a big move in Amazon. They're expecting a big move in Facebook. Let's say, for example, right here, I'm going to take a look at and see how much Amazon moved, right? Amazon, AMZ. Y'all bear with me here. I'm pulling up Amazon stock. Okay. So during the day, just for example, during the day, it went up 7%. That's $117 that it went up during the day. That's probably because people was expecting earnings. Earnings reports are going to be released. Now that earnings didn't get released, well, earnings did get released, but maybe it didn't meet expectations. All sorts of ways of why this particular stock may drop, right? This is what you guys have to think of when you are looking at earnings reports. If you're an option trader, or if you're a long-term investor or a short-term investor, you may want to pay attention to the picture of what you're invested in. Like, hey, what is this company doing? Company doing good? Is doing good? Doing bad? This is why you look at the quarterly reports. This is why they're so important. All right. Does that make sense for you guys and girls? Hope it does, right? So for the people that's catching this live, people that are talking live in the chat room, definitely thank you guys for tuning in. It's not going to be a long broadcast by any means. I just stopped by to talk about that. And since we're here a little bit longer since I'm live, I know there's people catching this live as well. You guys seen the big rebound today. Look at the Dow Jones up 400 points after being down like 600 points yesterday. So you seen that big max, that big dip. Then all of a sudden, what I tell you guys, buy the dips. If you can, you keep cash to buy the dips. Then it turned back around, and today it's heading back up for 400 points. So also on top of that, you're seeing the volatility. If you didn't see my last episode, I took it down, but I forgot. I did take the whole episode down, but I spoke about why you see so much volatility in October, why you see a big sell-off, or you see stocks don't do well between October, November, December. It's kind of that old saying of in the winter, you get your harvest in the summer, you plant in the winter. So that's kind of the thing, because this is the end of the year. A lot of brokers are wrapping up their annual reports, and what brokers do is, they have to get rid of the trash, things that didn't perform well, because that can make them use. I said, yes, sir. Yeah. If you saw that episode, now you're seeing all this volatility in the market. One day the market went down 300 points and back up another 2. That's crazy, right? A lot of volatility. And how can you profit from volatility? You can profit from volatility by using the VIX. VIX is the symbol. Holivel says, cuffing season, LO. People need cash for cut. That's true. That's true. People need cash. How do brokers make money? How does ETrade make money? How does TD Ameritrade make money? I don't know what Robinhood is doing right now, but I'm pretty sure they'll figure it out. But the traditional broker makes money when you buy and sell. People ask me all the time, hey, should I get an ETrade account? How much does that cost? No. As long as you have money in your account, they know you had the ability to be able to buy a stock and sell a stock. When you buy and sell, that's how they make money, right? That's one thing I hate about them. My mouth and lips get dry. So you have to buy and sell a particular company. So, write off a tax. Look at Derek Washington. Did you watch my episode? Write off taxes. Derek, I want you to tell everybody what this write off tax season means. Well, how does that pertain to an investor? Why would you care about that? Writing off. How is that important? Oh, in school for finance. Okay. Break it down. How does write off a tax season? How does that pertain to why an investor would do that? He's writing losses off, right? So the thing about what he's speaking about is, let's say you've had a shortened tax burden, right? Let's say, for example, in your portfolio, you have General Motors and you have Ford, hasn't had a great year, is down, you're down $1,000 on it anyway. Now you're going into the year where you're probably going to owe the government taxes, or have to pay the government so much in taxes or whatnot. Or let's say if you got some big winners throughout the year, you net $10,000 in profits throughout the year. So what you can do is, some people say, hey, you know what? It's the time to get rid of those losses, right? Let's get rid of those losses. We're going to realize those losses. Because when you buy a stock and just because it's down or just because it's up, that's not a gain or a loss. That's an unrealized gain or loss. You don't make money or really lose money until you buy or sell. It's like a house. A house can have a bunch of equity in it. Does that mean that is your money? No. You have a great value, but you haven't realized a profit or a loss. So when you sell that house for a loss, or you sell that house for a profit, that's when you realize a gain or a loss. That's why you see up there it says unrealized gain, because you have a gain or you may have a loss that are unrealized. So anytime that stock, that house, that asset could turn into a loss or can turn into a profit. So what people do is they realize the loss, which sell off the Ford stock. Hey, look, I lost $1,000 investing in the Ford. And then they can use that as a write-off against the gains that they may have. So now, yes, for a small-time person, one person, yes, but you have to think of it big. You have how many people that are managing 401ks, billions of dollars, trillions of dollars across the world. When they do this makes it different in the market. If I go in and buy 100 shares of Ford, whoop-de-doo, good for you. But when someone else is selling 100,000, 100,000, 200,000, or a million shares are moving back and forth, that can cause the stock and the stock market to have a lot of volatility when people are shaping those portfolios and things like that, right? So that's one of the ways you got to think of it. It can cause a massive sell-off, right? It doesn't matter if you and I get scared and say, hey, I want to sell off, and you sell off of $1,000, $5,000, $10,000. That's not going to shape the market. What shapes the market is when someone's moving millions of dollars at a time, right? So you got to think of it. You're getting ready to shape up those annual reports. You have to put out those annual reports. All right, I always we got in the chat room. Lavelle Atlas says, I always remember that in your video, you don't have a loser until you sell. So just because it's down, don't get rid of it. Exactly. You don't have a loser. You have, it would be like, I bought a house today, and the housing market collapsed in Denver, Colorado. It went down 100. It went down $100,000 or $50,000 from what I brought the house at. Does that mean I've lost money? No, I keep paying my mortgage and hold on to it. And if it returns and rebounds, then, or whatever, it's not a loss until you say, well, housing market is down, I'm out. That's when you sell. When you sell, that is a loss. That's when it goes into your income statement. It goes into your cash flow, all that good stuff like that. You have a realized loss. And that's what we turn into the IRS. That's what ETrade is going to turn into the IRS. That's going to reflect on your 1099 tax form, because you had a great year, you purchased an index, or you purchased Amazon, Google, or whatever, and you're up $2,000. Oh, I have to pay taxes. You haven't realized anything yet, right? Now, I go a little bit deeper. I will go a little deeper. You guys want to take a little deeper, right? For the GAAP, GAAP, help me out with that, Derek Washington. You should know that. The GAAP, GAAP is the accounting. It's the standardized way of how everybody reports their financial reports. And what's happening with that is Warren Buffett spoke about that at his last meeting. He said you may see a lot of volatility in stocks because, ooh, look at there. Boy, I love that. GAAP, General Accepted Accounting Practices. Woo, look at there. I love that. I love that. I don't know, I'm kind of weird like that. I don't know why I get excited about finances and investing and all of the good stuff. But yes, so this is pretty much a GAAP is the standardized way that you have to report things and to say whatever the case may be. You're a company, you have to say certain things. This is what's happening in my company. This is what she said. What's that? Don't worry about it. We're getting into it now a little bit. It's just a governing body of, you can't have everybody writing their own financial reports. So GAAP gives a standardized way of reporting your reports. This is what you're supposed to report. This is how it's supposed to look. Assets over here, standards for accounting, right? Right there. It gives a standard, because you can't have everybody out there, hey, Prince, write your report. I write on a Word document. This person puts something on their sales spreadsheet. Another company puts something on a sticky note. No. What you have to do is, this gives a standard. This standardizes the accounting practices, right? So what happens is, what Warren Buffett said was, like we spoke about, you don't realize a gain or a loss until you buy or sell. But with the GAAP, they changed their reporting and said that, hey, a company like Berkshire, that's Warren Buffett's company that owns a plethora of investments and stocks and all of the good stuff like that. At the end of every quarter, you must report your unrealized and unrealized gains and losses. So let's say if the stock market is up, Berkshire is doing good. They're going to report that, saying, hey, look, we're doing good. Company looks good. When the stock market is doing bad, and they report, when the stock market is doing bad, it's going to have to report those unrealized losses. So now that could make someone sell or buy being reactive. So he said he could create volatility inside of Berkshire, right? Inside the company. I don't want to go too deep into it, but that was one of the things that he spoke about. And I'm looking up the company now, BRKB. BRKB. Yes, it's $200 right now. Not too hot. $200 right now. This is Class B. I think it's Class A is probably like 300,000. But that's one of the things that he spoke about, that he was like, hey, they're going to have us reporting unrealized gains and losses. This would change the way that we report things, but this is not hurting our value. We're not gaining and losing value by what they're reporting. Because one day the stock market could be up. You can open up your portfolio today and be like, whoa, I'm a genius. Open up the next day and be like, whoa, I'm not that smart. But we know the market is up and down. And as we know, Warren Buffett, the legendary investor, is long-term. You're talking about 20, 30, 40, 50 plus years of just holding something. So as holding something, of course, the volatility is going to go up and down. But now that they have to report those unrealized gains and losses every quarter, it can cause volatility within the stock. So that's one of the things I want you guys to think about. All right. Y'all got any questions for me? Because I'm getting ready to head out of here. 1 second here. I'm getting ready to head out of here. Thank you guys for tuning in. And for the people, I don't know if I may turn this into a podcast, but if I do, y'all check out the podcast, which is The Investor Show. It's on iTunes. If you got iPhone devices, it's on Androids. If you have, it's on, I think it's Google Play Music. If you have Android devices, if you don't have either one of those or whatever the case may be, you got iHeartRadio. You got Spotify. We're on Spotify every week. We're on iHeartRadio every week. We're on I can't even think of all the places. Podbean, whatever, all these other brands that are out there. So check it out. Check out the podcast to get the audio experience if you are getting it. If you're hearing this on the audio, you want to catch the video, check us out on YouTube, The Investor Show. The Investor Show on Facebook, The Investor Show on Instagram, and The Investor Show on Twitter. So definitely, I'm going to keep bringing this to you guys. You guys stick around for some great interviews. I'm going to get back into some more tutorials. Keeping them fresh, keeping some new fresh tutorials, quick and easy. Get into some option trading a little bit, get into stocks, and bringing on some great guests and all the good stuff like that. So also, I'm going to be sharing something. I'm also featured on other people's shows now, right? That's kind of crazy. I'm featured on other people's shows. I'm on other people's podcasts. I'm on other people's platforms, shows, YouTube channels, stuff like that. So I'm going to be sharing some of their things. And when I share that, you can check me out or see what I got to say or to bring exposure to other people in finance as well. All right. So anyway, my name is Prince Dykes. This is The Investor Show. I'm the Prince of Investing. Until the next video, podcast, book. Forgot about the books. Check out the books too. Next video, podcast, cartoon, or whatever else you see me do crazy around the globe. Peace, be safe. I'm out, and thank you.